Okay guys, so this part of the course is called fundamental analysis. Whenever you're trading falls under two different subjects. The first subject being technical analysis, which is what we cover for majority of the course, and the second subject being fundamental analysis. Fundamental analysis is simply the economic side of trading, the economics of news events that come out, and how they affect the market. Whenever there is news that comes out about the certain pair that you are trading, or there is a world crisis, the market will be affected. Okay, now, for example, in the crypto market, or in a situation where a person might have a regular 9 to 5 job, if there was a crisis to take place, if a crisis was to take place, they could be at risk of losing their job, right? Because a recession or a crisis is painted to be a bad thing, which it is a bad thing, and it puts a lot of people's lives in jeopardy and their livelihood in jeopardy. However, with trading, it's actually amazing for us, okay? And we don't say that because, as in, we feel remorse for people who are in tough situations, of course. But the reason why I say it's amazing for traders is because we can make money both ways in the market. We can buy the market when the market is going up, and we can sell the market through a crash or through a global pandemic or through a recession, you see? So news events don't really have to be harmful for us. All we have to do is learn how to navigate around them. So why use fundamental analysis, aka news, etc.? So fundamentals can complement your trades, and what I mean by that is a lot of people are scared of fundamentals. Well, you shouldn't really be trading volatile fundamental news anyways, but the reason why I say it complements your trades is because fundamentals usually align with technical analysis. You see, it's just that a lot of people, when volatile news come out, they don't really know like what's going to happen to the market. So the reason why I say it complements your trades is because economics move the market, and if you are someone who just trades technical analysis without understanding why gold went up, or without understanding why gold went down, or without understanding why US 30 went up, or without understanding why Nasdaq went down, it leaves you in a state of ambiguity. Meaning what? You're just trading technical analysis. There's nothing wrong with it. You can make a lot of money trading just technical analysis, of course. I would say even me, my trades are 95% technical analysis, 5% fundamental analysis, you see. However, understanding fundamentals helps you understand ambiguity. So in the times where you see like a major move take place in the market, if you're someone who doesn't understand fundamentals, you think, why the hell is this happening? However, if you're someone who understands fundamentals and you understand news events and economics, etc., you would understand why that move has taken place. Okay, and how do you work out how do you even know where news is coming out or when news is coming out? This isn't the gospel of all fundamental analysis, but you can go to forexfactory.com. Okay, forexfactory.com. Once you go on forexfactory.com, you see a bunch of news, and you see a calendar of all the news that is to come for the week, next week, the week after, the week after, the week after, etc. Okay, and you're going to see colors. You're going to see a square, and you're going to see colors. I believe the colors are yellow, orange, and red. Yellow means this won't really affect the market. The news release at that time won't affect the market. Orange means it could potentially affect the market. And red means it will be volatile and it's going to affect the market. So avoid trading whenever there's a red news coming out for your pair. Okay, if there's red volatile news coming out for a pair that you don't trade, for example, if you just trade gold, and gold is fine. There's gold is yellow volatility, and for example, a pair like GBP JPY, so the pound and the Japanese yen, is red. You can still trade gold because it's only GBP JPY that is under the red volatility, so gold won't be affected. And that's an example of how to use Forex Factory. Over there as well, you can see some articles that traders release, and that people who understand economic news, they release those articles, so you can also read up on those articles. Also on TradingView, I believe it's on the top right hand corner, you're going to see an icon that's like a newspaper. If you click that, it shows you the news that is coming out for your pair. So if you're currently on gold or Euro USD or US 30 or Nasdaq, and you click the newspaper icon on the top right hand corner, it will show you news articles for the pair. So what's been happening over the weeks, etc., what people are saying, and things like that. You see, so Some of the main news events that move the market are NFP, non-farm payroll. Okay, non-farm payroll happens on the first Friday of every new month. Okay, there's one that comes out on a Wednesday as well, but the main one is on a Friday. Okay, NFP is non-farm payroll. The next when NFP comes out, it's usually crazy. It's a crazy like 1 hour. Furthermore, no, it's usually like a crazy 5 to 15 minutes in the market, where the market does move a huge amount of pips. Okay, a huge amount of pips. Another news event that is quite well known and major to affect the market is unemployment rates. So unemployment rates is basically a statistics of data basically compiled that come out and show how many people are unemployed in the US, etc., right? So when that comes out, it also affects the market. Another form of fundamental news that comes out and affects the market is CPI. CPI is a form of news. Another form of news that affects the market is GDP. GDP also affects the market. You guys it's gonna sound gibberish right now, but once you get familiar with Forex Factory, etc., and you see a live news event and how it affects the market, you're gonna realize these things. So don't worry, guys. You're all beginners right now, so these things will sound new to you. So there's there's multiple news events that affect the market. So for example, for the pound, if you're in the UK, whenever Boris Johnson speaks, it will affect the pound. Okay, so whenever there's a announcement from Parliament, a major announcement, it will affect the pound. If Russia and Ukraine, when that was first announced, if there's a war, it will affect the market, you see, for that pair. So for example, when Russia and Ukraine went to war, you saw what happened to the euro. If you guys are new traders, go on Euro USD and go back to the time, you can see it in the date at the bottom, go back to the time where the war between Russia and Ukraine was announced, and you guys can see how that affected the market. Okay, so we use both fundamental analysis and technical analysis together. You see, for example, COVID as well. When COVID happened, go back on the chart, guys. It will be very good for you guys to see. Go back on the chart and look at COVID times 2020. Look at what happened to the charts. Look at what happened to the markets. Okay. So we use both technical and fundamental analysis together, and they do not have to be conflicting. Okay, sometimes they are conflicting, but when this is a time when you can avoid bad trades. If the technical analysis and the fundamental analysis don't line up, stay away from the market. Don't trade for that day or for that week if there's a lot of fundamental news coming out that's very volatile and it don't align with the markets. Okay. However, if you can see that it's making sense and it aligns with your technical analysis, then no problem, okay? As long as you have the correct risk management, okay? That's the most important thing. So, important price levels. For example, you know how we spoke about psychological levels in the course. I don't know if you guys are there yet, but it's going to make sense later. Important levels, key levels like weekly levels, especially daily levels, they need a reason to break. Okay, they need a reason to break, and usually this reason will be news. So news is disguised as a reason for those price points to break. Okay, so always keep that in mind. Fundamentals are more popular in investment banks and hedge funds. Okay, that's why you wouldn't really see the average trader using fundamentals. Majority of traders are technical analysis traders, and they incorporate a little bit of fundamentals. But to see somebody solely trading fundamentals is very rare, unless they are investment bankers or they trade for a hedge fund. Okay, so the consensus of the market is important. So that's why we use both technical and fundamentals. So you have to make a plan. You have to make a plan around fundamental news coming out. So I would say number one, ask yourself, how can you manage risk? How can you manage risk whenever there's news? Okay. And number two, what events actually move the market? So do your research online. What events actually move the market? I mentioned a few news events to you that move the market, but you guys can look on Forex Factory, and because you guys are traders now, you have to get in the gist of revising and backtesting and doing research on Forex Factory. Some websites you can also use are Bloomberg for your fundamental news, and you can do your research on economics. Okay. Find out when not to trade. Find out when the markets are quiet. Okay. And understand that these key risk events can either make or break your P&L, your profit and your loss. So be very smart of choosing which news event to trade. I would honestly, as a beginner, do not trade news until you have at least 6 months worth of trading to your name. Okay, because then you understand certain movements and why it's taking place, etc. Especially with this course, you guys are meant to be revising every single topic that I'm teaching until it sinks in your head and it sticks with you. Okay, and work out which news events are important and which are not, and the key themes. Okay, and we spoke about that earlier, about going on Forex Factory and keeping that tab open every single day when you're trading, so you can see if there's any news coming up. So some charts I would recommend to look at, but don't use it as, you know, primary analysis, etc. Just so you can have it as extra fundamentals. The same way we added Euro USD, Nasdaq, US 30 and gold to our trading view, you can go on the top right hand corner of trading view and click the plus sign, and you can add something called the DXY. This is called the dollar index. So this represents the US dollar, the value of the US dollar as a whole. Okay, the entire US dollar's data is compiled into one. So whenever the DXY is going up, the dollar index, whenever that is going up, usually Euro USD would be going down. And any major pair, for example, USD, JPY, remember we spoke about major and minor currencies, any major pair that starts with USD will be going up if the dollar index is going up. If the dollar index is going down, any major pair that starts with USD will be going down. Okay, so whatever the dollar is doing, the other prices that are traded against the dollar will be doing the opposite. Okay, so if Euro USD, if the dollar index is going up, that means the euro will be weak. Okay, the Euro USD will be going down, and that's how you incorporate the dollar index. And you can also use things like the US Treasury yield, the US 10-year Treasury yield, and you can add that onto TradingView as well if you just search that up. And you can also add US government bonds, okay, for those people that are really interested in the economics and the fundamental side of trading. But you do not need that to make money in the market. That's just if you want extra confirmation of economic research, okay? And that is pretty much everything you need to know in regards to what fundamentals are in trading, Forex, etc., and just trading in general. So for those of you guys who are interested in fundamentals, you can follow the steps that I've recommended and do your research and incorporate that alongside your technical analysis. And yeah, that's it, guys. I'll see you guys in the next video.